Hello everyone and welcome back to another market review. This is Silent. We are looking at the NASDAQ December contract for 2025. Again, we're starting off with a weekly chart. We got a strong close on the week this week. It was great to see. Didn't end up doing any TGIF delivery to put in a wick like that, like we were expecting on the weekly candle, but nonetheless we delivered with strength and closed near the high this week. I believe the reason why we didn't get that TGIF style pullback is because it happened during Thursday, and we can check that out going into lower time frames here. Let's drop down to the daily chart. On the daily, again, we had this rally yesterday off of the daily buy-side imbalance we were watching through this swing high. Price closes off the high yesterday, and we open here today. Price draws lower into the previous candle and just barely misses the old daily high. This delivery here and here is the TGIF setup playing out early on the week, so we get it one day early, and that's shown through this wicks that create the balanced price range as price delivers through on this daily candle here, and we settle on the week above the previous day high. Price delivers with strength through the midpoint of that wick and offers a discount delivery structure in this range to send us higher and close strong on the week there. And on the 4-hour chart here, we can see that delivery through the daily wick as we transpose it from the higher time frame. The key point is seeing that nice candle like this as we open today. Nice delivery on the 4-hour basis, straight through constant encroachment of that wick. There's nothing really in here that we could work with without going on a lower time frame to refine. So it's better to just stick with the daily level and kind of just skip from the daily to the hourly whenever price is doing doji and stuff like this on the 4-hour chart. There's things that we can see, like this doji candle with the long wick. Price creates a new high after that and just stagnates inside the range of these two bodies here and just stabs under the opening price a few times and then finally digs really deep down into this large wick and almost taps this candle's high, and that's when we almost got the delivery to the old daily high here on this wick during right around midnight open. And then all throughout London we rally up, open at 10 o'clock after coming off the high and trade lower and retest the daily closing price from yesterday and deliver up and close it back above the constant encroachment. After price delivers down and then crosses over the opening price of this candle, you could be a buyer to catch any delivery here. On the hourly chart, we added a fib onto that large wick on the hourly here from yesterday. I was watching this range last night, but because it only delivered with a wick, it seems to have canceled out the need to revisit any liquidity lower. I was willing to see it try and drop down into there, but I also was paying attention to the upper portion of this range, because if we couldn't deliver south of this range, then there's no reason to be targeting that. So after midnight, we open at London and do a reversal, create a down close candle here, and I draw the opening price to the high over in time. You can see that delivery after 10 o'clock. That gives a retracement and then a rally going into the end of the day, closing strong on the day. On the 15-minute time frame, I was paying attention to this fair value gap, and all last night I was watching the new day opening gap here, and price was kind of stagnating until just before midnight, where we crossed lower under this south side liquidity, doing a shift under, and we get a nice sell from this imbalance down into that 4-hour wick that's not shown on this chart, but nonetheless this down close candle is also something to be paying attention to. We finally shift back above during this delivery and reaccumulate on the new day opening gap and continuously deliver higher. It was a lot of back and forth during the New York Open, and then just before lunchtime we get that redelivery into the new day opening gap, and it skyrockets and takes out anyone trying to catch a early top or trying to see that TGIF play out. It will often do this when we see a TGIF deliver early on Thursday. So overnight, price accumulated inside the TGIF range, which is right around here, the 720-ish range to 740. The TGIF levels were accumulated on top of last night, so the only thing that we could have done besides just consolidate all day would be to do a quick delivery on top of those who are trying to catch early shorts and trying to pick a top. On the 5-minute chart here, I wanted to outline a little bit of what was going on during the New York session. Price consolidates during the pre-market, and then during New York Open we start to rally. Price sinks down into this down close candle, puts in a nice high, delivering with strength, but immediately after this high is created, we start to deliver back on top of the 5-minute buy-side imbalance that was created during this rally. Price has an unwillingness to create another high at this time, so we start to deliver lower and start to treat it as a premium array. After this shift in market structure, we can be a seller and be wary of any delivery like this, because there's large wicks above here. It's easy for smart money to want to swipe the rejection blocks up here and then trade lower. The main thing to pay attention to after this closure below the buy-side imbalance is to see if candle bodies are respecting the level as an inversion array, which we see here. Price cascades lower and does another shift, leaving an imbalance. Price stays inside the imbalance with candle bodies, delivering higher with wicks only, then shifting lower and trading into south side liquidity that was created at 7 o'clock. Finally, we get a shift above this short-term high and create a balanced price range here. Price reaccumulates inside this small little price delivery pattern and leaves it with a imbalance. So when this happens and there's a strong closure like this, this imbalance is not expected to be retraded to. We open on this candle and trade lower, about halfway of the imbalance candle, and redeliver above the opening price and close strong. After the redelivery above the opening price, you could be a buyer, and understanding that this range is being brought over as a buying opportunity. Smart money is offloading previous shorts here, so any short positions that were here that they didn't capitalize on taking profit here, they're eliminating at this rejection block here. So price has a sensitivity to that. It shows one last time that they're exiting their orders and positioning into longs. Price delivers higher and attacks the buy side liquidity here and kind of consolidates going into the afternoon. On the 1 minute chart, we can see that buildup of buy side liquidity all throughout this range. Price creates a imbalance after shifting lower. We redeliver into the imbalance and kind of color over it, and then finally give the real shift, which is on the 5 minute basis. This shallow shift is not really as important to me as the 5 minute basis, because this delivery here is when price is going to be in majority of its selling opportunities. All of the consolidation should be finished because it took place during this retracement here. So after this delivery here, we retrace up one more time into the 1 minute set aside balance. The bodies are respecting the constant approachment of the range, and this is the delivery lower on the 5 minute basis that gives us that closure below the 5 minute buy side balance. So any redelivery here is a selling opportunity. Notice that price delivers into the first presentation fair value gap before doing the retracement. So we trade from here down to here and then come all the way back up. Does another shift lower through that 5 minute imbalance. It creates a SIBI. This is another selling opportunity if you weren't capitalized on this imbalance. And inside the 5 minute buy side imbalance, price cascades lower with some strength. Then we retrace into a mitigation block here twice. Sells off into our sales liquidity from 7 o'clock. We then do that shift. The sensitivity is inside this wick because this up close candle is a breaker. Price does a low, high, lower, low. So trading through that, we want to see sensitivity at the high of that range, and especially that wick. We reaccumulate here, and it's off to the races. Trading above the first presentation again has a reclaiming effect. Notice the bodies on the upper portion of that range, and we deliver right into our buy side liquidity that was created on the market open. Alright, so that's going to be it for me today. Hopefully you learned something. If you had anything insightful, leave a comment. Don't forget to like and subscribe. I will see you all next week.